everybody to another episode of Rooster Talks. Today I'm here with the Managing Director of Poseidon, Mr. Peter Harold. Peter, would you mind giving us just a quick update on Poseidon?
Yeah, thanks Tony. So Poseidon is a nickel development company. We've got three separate assets, which is Black Swan, which is the one we're going to get going first, Lake Johnson, and also Windarra. So combined, we've got about 400,000 tonnes of nickel, quite a nice little gold tailings project as well up at Windarra, but we're fundamentally a nickel development company. They're all assets that have been operated before, and we're obviously in planning now with a nickel price environment to get Black Swan going again, and hopefully Lake Johnson and maybe even Windarra after that. So quite an exciting time for us. Market cap's about $130 million today.
Thanks, Peter. And it is great to catch up with you again. We spoke before Christmas, and a lot of things were underway at that point in time. And just yesterday, on Monday, we had another announcement from Poseidon. And I thought, from my perspective, it was a really, really solid announcement. And it brings to me an air of inevitability about Poseidon. It's a company that is poised. It's a mining company that's moving into a mining phase company. And I think that's a terrific story and must be a terrific journey. So would you mind just giving us a little bit of a recap of the Monday announcement?
Okay, so Monday's announcement was really a project update on the Black Swan restart. So we've really identified the areas that we need to work on to get the financial investment decision, which is targeted for mid-year. And one of the main ones, or the two very important things there, are around the offtake. With any project, especially a nickel concentrate, you need to have a solid offtake partner, and you need to have a multi-year arrangement. So we've got a life of mine based on the November feasibility study of about 4 years. So we're looking to probably lock in at least a 4-year contract with an off-taker. We've had very strong interest, as we said in the announcement, from smelter companies, traders, others. We had probably close to 20 proposals put in for either off-take or financing or both. And what we've recognised in reviewing all of the bids that we received was that the most attractive structure for us would be an off-taker who also provides us with some project financing. And so we've shortlisted down to a smaller group, and we're now going through that due diligence phase, site visits if they're required, reviewing of all the detailed geological, metallurgical information, all of that work. And that's underway, and that'll obviously lead us down to a single off-taker, and then we can go through to documentation and so on, to a point where we've got documents that are acceptable to the board to make a financial investment decision. So that's very critical. So that's the project debt side of the financing and the offtake. And so that was a major focus of the announcement. We also talked about the drilling that we'd done in the open pit, and we did about over 10,000 metres of RC in the pit. All those chips have been put into the assay labs, and we received back about 20% when we put that announcement. We've actually received some more since then, which is good. And so hopefully by the end of March we'll have all those assays back, and then all that information will be collated and sent off to the people who are doing the resource update for us, which is Golder. And then hopefully, sort of in April, we'll have the resource update completed, and we can then update the mining inventory, and hopefully that'll lead to an upgrade in the reserve and potentially an extension of the mine life. So that's happening there. Talked about the metallurgy. I mean, that's all been pretty well done now, so we're just optimising and been a fair bit of work done around the expansion project, but I'll talk about that in a minute. And then there's things like some of the other things we're going to need for the restart, and one of them is recognising that accommodation is very tight in Kalgoorlie, and so we just talked a bit about what we're doing there in terms of some of our options. We do have a small camp at site, which is a temporary accommodation camp that we used for the drilling, and we'll use that for the refurbishment. But obviously then we'll need a permanent number of rooms for the operations, and so we're looking at our options there for that at the moment. So that was pretty much the guts of the announcement, Tony.
There was a lot has been done since we spoke, and it remains on track, which is the really good news. Mr. Market is not that responsive at the moment, but as I said in my opening discussion, there's an air of inevitability, and so one would hope that the market perception will be changing over the next couple of months. Certainly by June, one would hope. Coming back to the assay results, and we've got 20% in the next 3 or 4 weeks you'll have the balance. Can you comment on whether they are meeting expectations, and if they do and one extrapolates, what order of magnitude are we looking at with respect to the expansion of the resource?
Yeah, look, it's probably a bit early to say, but I can comment just on some of the work that we're doing. So we're doing a lot of work around the talc serpentinite, just to make sure we understand that because at the moment we're only treating the serpentinite material, and the talc ore, which has got mineralisation, it will be stockpiled. That becomes more important for the expansion project where we can actually treat that. So it's important that we understand that for the metallurgy, because it's obviously different metallurgical characteristics. There's also, we want to make sure that we've got a good handle on the non-sulfide nickel component, because that does impact on the recoveries. And it's very important that and in any nickel sulfide project, there is always a component of non-sulfide nickel, which is not recoverable. So it always just goes to the tail. And you've got to have a good handle on that, because obviously that does impact on the metallurgical recovery. So there's a lot of additional work with those assay results to actually just fill up our knowledge base of non-sulfide nickel and the serpentinite talc, and obviously then the grade of nickel and what that means for the resource and the pit optimisation. And obviously now the other thing that we've got is we've got indicative terms which are different from the ones we got from the numbers we used for the feasibility study. So we can update the cash flow models, we can put that into that, and that might improve the shape of the pit, bring some more material into the mining inventory. So as I mentioned, that could have an impact on reserves as well. So early days, but we'd want to get all those results in and then collate those and give those to the experts.
I look forward to seeing the modelling and the forecast. Just if I can ask you to expand on the expansion project, which in basic terms means it goes, the processing plant will be upgraded from a 1.1 million tonnes per annum throughput to 2.2 million tonnes per annum.
Correct. Yeah. So at the moment we're operating on the basis, as you said, of the 1.1. So that's basically refurbishing the SAG mill. That's at Black Swan, and then we run all the ore through the float cell and produce what we call a conventional nickel concentrate. Runs about 14-15% nickel, about a 6-to-1 iron MgO ratio, and that material is easily smelted by a conventional smelter. And so that's the process route. They're the people we're talking to with regard to that project and getting getting the terms from those particular groups. The expansion project is different because we can actually then treat the talc carbonate material, which is currently not in the reserve. It's in the resource, but not the reserve. So that's the key difference. And so what you then do is you have to also refurbish the ball mill, which is there at site, and that gives you the 2.2 million tonne throughput. You've got plenty of milling capacity then. And all you then do is you go through the rougher part of the concentrate flow sheet, which is the rougher cells. You may need to do one stage of recleaning, but fundamentally we're talking about a rougher concentrate, which would be a 6 to 8% nickel grade, thereabouts, but much higher MgO. So it's not a nickel concentrate that would be processed by a conventional smelter, but not so much because of the nickel grade, but because of this high MgO. So you need to find another route to market for that. And obviously the types of places it can go would be a POX plant, pressure oxidation, or a mixed or a high pressure acid leach. So, and there are those existing in Western Australia. POX plant there's not, but obviously Pure Battery Technologies is talking about building one of those in Kalgoorlie. So we're in conversations with a number of different groups, providing them with metallurgical data. And a lot of the work that's been done at the moment by David Maxton, who's the project director, is around what is that nickel, that rougher concentrate going to look like, right? What's the optimum recovery and the optimum nickel grade. Now, once we've got that, and what are all the other specifications? What's the iron MgO ratio? Well, how much sulphur? All of these things become important. And get a typical specification, get some samples, and then give those to various different people who've expressed interest in maybe treating that material. So that's where we're going at the moment. So obviously, getting back to what does that mean? Well, the benefit is you're bringing in all of that talc carbonate material, which is currently just put on a stockpile and it's not waste, but it's not treated in the 1.1 million tonne case. So then it becomes ore, right, which currently it's not. So that would obviously change the profile because you're still mining the same open pit. So your mining costs haven't changed, but you're now bringing in material which wasn't part of the mine plan. So obviously your unit costs will go down. So that's the key. You produce more nickel because obviously you've got more nickel units that you're putting through the processing plant for no extra mining cost, right? So your unit costs will come down. There'll be some more cost in processing and so on, but and then obviously the key to all of this is where is it going to go and what's the payability? Because it's very different to a conventional concentrate, right? Because conventional concentrates have now been traded around the world for many years. I mean, I've been selling nickel concentrates in various different companies for nearly 30 years, and the terms are well known and how it all works, the percentage of the nickel price, penalties for certain things like arsenic and high MgO and all of these things. But selling a rougher concentrate is a little bit sort of new. Very possible and very doable. We've got a lot of interest, but it's what is the payability, right? And so because you've got the potential to get sulphur credits and some other quirky things, it's different, right? And so the cost base of a pressure oxidation plant or a high pressure acid leach is very different to a conventional pyrometallurgical smelter, right? So you can't, it's comparing apples with oranges. And so, I mean, luckily I'm an industrial chemist by training, and also David Maxton's a metallurgist. And so, our knowledge of these things, we understand those flow sheets, and they're very different to a conventional concentrator. So it's about sitting down with those customers, potential customers, and understanding what their cost base is, and then working out where the win-win is, because obviously there's more tonnage. So we are going to currently produce between 6,000 and sort of 8,000 and 9,000 tonnes a year of nickel in concentrate in the conventional concentrate. Obviously, if we're going to, put 2.2 million tonnes through the plant at, similar sort of underground open pit grades, obviously the recoveries will be a bit different, but you can see how the contained nickel per annum could go up. And so this expansion study is going to be, we know how much tonnes will go through. It's 2.2, we can do that. What is the average grade, serpentinite and the talc carb, the different metallurgical recoveries, how does that all come out? And then obviously what's the grade of the concentrate, where's it going to go, what's the transport cost? And then obviously, and if it's local, that's fantastic because it's just trucking versus shipping. And then obviously what's the payability? And so that's all the work that's going on at the moment. But the ability to unlock all of that talc carb material is just wonderful. And funnily enough, we've discovered some documentation that suggests that the previous owners, Norilsk, were looking at the same thing. Yeah. So in those days, they owned the Cores project, which funnily enough, I worked on back in the late 90s. Cores was a high pressure acid leach plant, one of the three that were built in Western Australia. That one and Burlong obviously not operating anymore. Murrin successfully going on from strength to strength. But And in those days, so this is back in the 90s, in the late 2000s, Norilsk actually looked at producing a product and taking it down to Cores. So we're not sort of reinventing the wheel, although, as I said, Dave Maxton's been, really very cleverly working through this and come up with a few of these options that other people probably, had looked at before. But the nickel price would have not made it attractive, whereas now with a nickel price of sort of, $12 a pound or $11 a pound is a lot more attractive than $5 a pound.
Yeah, it's comforting to know, nonetheless, that Norilsk were looking down that pathway. That is a good thing, and also in the last decade or so, because it's been 12, 14 years since then, there have been improvements in technology as well.
And the nickel price is so much better, yeah. And the outlook is good too.
Yeah. Just to clarify, so you're looking at, if you go to the 2.2, your per unit costs will be dropping. Does it have the impacts on the capex?
Yeah, well, the incremental capital to go from the 1.1 refurbishment to 2.2 is pretty small, and we haven't finalised those numbers, but we would think it'd be less than $20 million additional. Yeah, so that's the other benefit too, right? So the capital for the stage one, the refurbishment capital, is about $36 million, and there's obviously, you know, working capital, underground mine and open pit. So all up, I think maximum cash negative based on the feasibility study was about $90 million Aussie dollars. And so that's the number that we're currently using at the moment. With the refurbishment of the 2.2, as I said, you know, you'd probably add another $15 to $20 million onto that number. But that number needs to be formalised through the study process. Yeah.
Thanks, Peter. The other thing I'd like to get a comment on is, you've quite rightly, and most of us that have looked at Poseidon over the years have said the area of vulnerability has been the life of mine.
Yes.
And you've made that a clear priority, and by the end of June you'll have numbers which will sort that out.
Hopefully.
Absolutely, hopefully. Sort of, what are we looking to do? What is the impact going to be on the life of mine should those numbers pan out? Order of...
Look, any improvement on the life of mine is good, right? And again, can't put any numbers on it yet, but you know, at the moment, a 4-year mine life is not bad. I mean, when we started Savannah, when I was at Sally Malay or Panoramic back in the early 2000s, I think we only had a 3.5 or 4-year mine life. And once you're going, obviously, you know, you've got cash flow coming in, you can do more exploration, and obviously we've got the expansion project that we talked about just a minute ago. So anything where you can get an extension in the mine life improves the financeability of the project, because obviously it means that the debt can be repaid over a longer period. So you've got a more, what do you call it, like there's a longer tail, and financiers like to see that in case the nickel price does something unexpected. And also, you know, there's obviously the potential then to optimise and find, you know, third-party feeds that might be able to be fed in. I mean, all of those sort of options are open to us. Exploration potential. We know there are other targets around Black Swan. It has been extensively drilled, certainly around Silver Swan, but you know, we discovered Golden Swan, so the potential for some more high-grade deposits is real. New Exco, our geophysical and consultants are actively looking for us and trying to identify the best priority targets, and we're working on a drill program probably sometime, well, we're not too sure yet, but we're just trying to work out which are the best targets and when we could drill those. So there's lots of options, and you know, so getting back to, I guess, to answer your question finally, just say, once we've got all the assay results in, we've given all that information to Golders, you know, they can come back and we can optimise it. We can throw, you know, maybe we can adjust the cut-off grade a little bit, given the nickel price outlook and the payabilities that we've received from the tender process we're in through. All of that, you know, hopefully will optimise and lead to an extension of that mine life. But how far? I just don't want to say this. I just don't know. Yeah.
Yeah. No, I appreciate your...
Good question, but
Peter is pretty conservative in what he puts out there. Observers of the company and analysts can afford to have a greater blue sky scenarios in mind. Peter always brings us back to earth, but I think we keep our fingers crossed for an extension there. And I'll come at an additional factor that may or may not impact the life of mine, looking at POS as a whole, when you bring in Lake Johnson. Yep. With the exploration
yes.
commencing.
Yep.
How would you see things happening there in the event that the results from Lake Johnson are positive? And if you can just remind us of the sorts of grades that you've been getting at Lake Johnson and how...
That's a good question. So look, obviously Black Swan is our primary focus, and the plan, stated company goal is to get that back into production. That's the key driver, and that's what we're focused on. We've got the other two assets, as you said, Lake Johnson and Windarra, both with substantial nickel endowments. Both have been previously operating mines. The benefit of Lake Johnson is there is a mill there as well, in similar condition to the Black Swan plant, about 1.5 million tonnes. The initial grades that they mined back there when they had the original Emily Ann ore body was about 3.5% nickel. So that's very attractive grade. The second ore body that they mined was Maggie Hayes, and that was about 1.5%. Still good grade underground, and they did that with a sub-level cave. There's still about 50,000 tonnes of nickel at about 1.5% in that ore body. The only thing about that is the mine is flooded, and we'd have to pump that out, re-establish all of the underground services, and then obviously refurbish the mill. So it's a couple of years worth of work to do that and to get the mill. So it's not something that we're talking about doing tomorrow, Tony. But what we have decided to do is do some exploration there to see if we can find some more of that higher grade material nearer surface, so that fallback position would be restart with Maggie Hayes at the appropriate time. But if we could find another Emily Ann style ore body, well, that'd be fabulous, because double the grade. So that's a focus now on the Western Ultramafic, and when you talk to Karen, you can ask her some of those questions. But it's exciting, and the best place to find new ore bodies is where someone's found another one close by. We found that from pretty much every project I've ever been involved in with nickel. Generally speaking, the best place to look is very close to where you're mining. And I think, and then Windarra. I mean, that was a mine back in the 70s and early 80s, and there's no processing plant there, but there's an underground decline down to about 400 metres. It's flooded, but it was pumped out previously by previous management at Poseidon and drilled back when Andrew Forrest was the chairman, I think. And they found a substantial ore body there. There's about, I think it's 70,000 tonnes of nickel in the Windarra ore body. And there's also another 70,000 tonnes in Cerberus at about 1.6 or 1.5 from memory. So another opportunity there. And we're looking at that as either, could we sell that to someone for direct shipping ore, or could we even bring that down to Black Swan and process it there? It's about 300 kilometres by road, which sounds like a long way, but when you've got a processing plant that's operating, it's got installed capacity, the best way to make money out of that is to treat your own ore. And so you would put your own ore in ahead of a third-party material, which you don't own the ore. And so I think there's a lot of options, and exploration success can only just be the cherry on the cake in terms of that one. But yeah, so we've spent a lot of time looking, and we're coming at it. It's a whole new team here that's been together now for a couple of years. And with the benefit of different people's views, especially geologists, everyone looks at it a bit differently. And I'm amazed in my career what I've seen in terms of, when we owned Lanfranchi when I was at Panoramic, that had been owned by Western Mining and operated for 25 years or something. And we bought it to restart it off the back of an ore body called Helmet South. And 300 metres away from Helmet South, we found Deakin, which was 65,000 tonnes of nickel at over 2%. Virgin discovery, and Western Mining had been there for 25, 30 years. Now, Western Mining geologists, clever people, found a lot of ore bodies, but for whatever reason, their geological model was not quite correct for that part of that tenure. And so we turned up a new set of eyes. 2 years later or 3 years later, we made this major discovery, which kept the company or that project going for another 7 or 8 years. So they're the types of opportunities that you can get with these komatiite channels, and they do tend to occur in clusters. And I think that's why all of the small Kambalda projects have all got opportunities to find more ore bodies, and they're doing that. So I think we're excited about the potential. There's no guarantee, but the only way you're going to find these things is good geology, understanding the structure, and then basically targeting and then drilling. There's no other way to do it. But the great thing now is you can drill holes, and if you don't discover something, you can always put a EM probe down it, so you get sort of 2 for 1, if you like. And even the program we're doing at Lake Johnson, which will start probably sometime early April, is an opportunity there to get some co-funding from the government up to about $200,000 or $180,000. So it's all helpful, right? But to me, it's all about the geological model, understanding the geology, making sure that you question the previous model. Is it right? Is there an opportunity to tweak that a little bit and maybe somebody's own flavour experience come in and sort of pick it a bit differently like we did at Lanfranchi? So I think there's an opportunity with all the three projects to do something like that.
No, that's welcome news, and sort of you think about it from investors, shareholders and long-termers. Ideally, what they can see from what you've said is there's a potential for almost a cascading effect. So you're bringing on stream a Black Swan,
yep.
Doing all the preamble work from down at Lake Johnson comes up, and then going back up into Windarra, and it means life of mine and mining operations extending.
Well, that's right, and we've said publicly we'd like to be at least a 15,000 tonne nickel a year nickel producer, right? And that to me is with what the assets that we've got, that's a realistic target, right? Now, I'm not saying that all of that nickel is going to come from one place. It could be a combination of material. It could be Black Swan ore plus Windarra all being processed at Black Swan, right? It could be a combination of Black Swan operating and Lake Johnson operating, but collectively as a group, not an individual asset, but I'm talking about a global sort of at the aggregated Poseidon production, a 15,000 tonne a year plus would be something that we're looking to achieve.
Peter, just bringing back to the shorter term and the likely refurbishment on the back of the FID and the offtake
Yes.
funding, project funding scenario.
Yeah.
The time frame for refurbishment is still circa a year or so?
Yeah, I mean, when we got GRs to do the feasibility study work, they from the PFS that they did for us, or the scope, they'd sort of said 9 months. When they did the BFS numbers, they said 11 months. So let's call it 12 months. So yeah, we're assuming that number's still the right number. So about 12 months. There are some long lead items in there. And so, assuming we make FID sort of by mid-year this year, we'd be talking production mid-year next year. It's roughly 12 months, yeah.
Look, I'll probably finish off with some comment about the two things which you're expecting to come in before the end of June. You must be pleased with a strong level of interest and active engagement with offtake and debt financing partners. And I know if there's a small list now and they've been into the data room.
Yeah.
Can you comment on this crucial component, how it's progressed and your level of confidence about completing that to having an agreement?
Yeah. Look, I think, again, the work that's been done, and it's been stewarded by David Maxton and the rest of the team, GR Engineering, they've done a lot of this work before. It's certainly in their wheelhouse, and this is what they're good at doing, these refurbishments and so on. So, quality group there to do the work. You've got the metallurgy's been done, but David's been sort of managing all that, but we've had strategic metallurgy and GRs as well involved. So there's a lot of historic data, going back from MPI, line ore, and then through Norilsk. We've got all of that data. So we've got an abundance of historic knowledge. We've done a lot more test work. We've, if you could say, cracked the code, but David's idea of blending the Silver Swan tailings in that's sitting there, basically from the days that I worked there in the late 90s. And he's putting that back in with the high grade and the open pit material, and that's got the benefit of getting you, and also using the old Silver Swan mill as a regrind mill, which is again something a bit novel. Adding all that together, you've suddenly got a 14 to 15% concentrate with a good sort of iron MgO ratio, sort of 6 to 1. That's really attractive smelter feed, which previously that wasn't something that was sort of looked at. So I think that's what we call sort of tweaking or sort of cracking the code, if you like. But that's something that David has stewarded. So I think hats off to him for that work, and that's made it a more attractive concentrate. And as a result, we've had a lot of interest, right? So I think that's been a really good thing. I mean, obviously the market's good too. There's not a lot of new nickel concentrate that's been brought back into the market again recently, and so as a result, smelters have been continually upgrading, tweaking, and so they've all got capacity. I mean, Jinshuan, Poseidon, BHP here, Nickel West, various others have all got smelting capacity, so they're looking for higher grade nickel feeds, and this one fits the bill, so hence a lot of interest. The traders have all been active, so yeah, I mean we're delighted with that interest. But again, you've got to have the right material, so we've got the right material, but the X factor for us at the moment is this expansion project. Can we produce a rougher concentrate that's attractive to these POX plants or the high pressure acid leach? We think we can, and that's a really exciting opportunity to for down the track. So look, watch the space. There's a lot of news flow coming out ahead of FID. We're all excited. Everyone's pretty fired up, which is great. Really good team of people. Everyone's invested. So lucky to have a quality group of individuals. Great board. Great direction. So yeah, we've all got a singular focus. Let's get started. But as you mentioned before, there are a lot of risks with these things, and you've got to make sure you tick every box. And you can, if you raced into these things, you could fundamentally make a mistake, and we don't want to do that, right? We want to do it. When we press the button, we want to make sure it's a very smooth ramp up, and we don't make a mess of it, right? So we're really trying very carefully to just dot every I and cross every T twice, and just really make sure, because if there with any of these sort of projects, there's always an inherent risk there, and it's usually the thing you don't think about, right? So if you've had lots of eyes look at it, you've had a bit of some of the old grey-haired people that I know have a sort of look over your shoulder. Peter, have you thought about that? David, have you thought about that? Craig, have you thought about that? That's the input that we're going to get, so that when we press the button, we will have and that's not to say that things won't sort of, there won't be some bumps, but we don't want to have something that's really going to hurt us, because they're risky restarts of old plants and things. They don't always go according to plan, so we want to make sure this one does.
Peter, look, thank you. It's been a pleasure speaking with you, and I say to our viewers out there, keep a close watch on Poseidon. This is a company going somewhere, and you will see it making progress over the next couple of months. So pay attention to it. It could be very rewarding. It is a company that is poised. Nothing better than seeing a company set up to be a mining company, becoming a miner profitably. That's the vision that's been outlined for us today with Poseidon. Thank you.